We talked about that unchanged in the LPR this morning. Well, what's going to be that window for cuts now?
Since the first quarter GDP came out better than expected, and there are some signs that the Chinese economy is bottoming out, at least briefly, in the foreseeable future, that we do feel that the authorities feel some sort of relief, and it feels to us that the pressure of acting immediately has declined. So the first possible time for them to cut the MLF and therefore the LPR would be in June, but the higher probability is probably they need to delay that into the second half of this year. We still see the window for LPR cuts opening, especially for the back end of the curve. We believe the 5-year needs to be cut more than the 1 year. Particularly, we still see some pressure in the real estate sector.
Okay, because that's the mortgage, the one side to mortgages as well. What does it do for, if we do get that cut? I mean, the margins for these banks are already under pressure substantially. Do we get an asymmetric deposit rate cut, for example?
We believe we will see that fairly soon. So we are already seeing the state media hinting of such a move this morning, and we believe there's a very high probability for them to be guiding overall conventional deposit rates lower in the current quarter. Particularly, they might again cut the back end of the curve more than the front end, like what they have done last time. For example, the last time they lowered the back end, like the 3 to 5 year deposit rate by 50 to 60 basis points. On the front end, it's either unchanged or down only 10 basis points. We believe they will continue to do so in order to safeguard the banking sector's margin and making more room for the cut of loan rates in the future.
Does that mean CGB yields can head lower, or you think the downside is pretty limited at this point?
In the short term, we think the downside is more limited, given they are already at a historical low level. We are already seeing some stability of growth, some possible small rebound of inflation. But in the medium to long term, if we talk about quarters ahead, we still see China rates as a lower for longer story.
I mean, you've been watching inflation, and you mentioned inflation as well. What's the best case for consumer price inflation this year?
Well, we believe that one of the best cases, at least for month-on-month inflation, returning to the positive territory. What we have observed last year is that the bulk of these deflationary pressure actually comes from food. And on the other hand, services inflation failed to pick up, but they were indeed still positive. So with pork price already at such a low level and everything goes in cycle, we believe that that cycle might be turning around later this year, and it's going to bring CPI inflation gradually higher, back to around 1% by the end of this year. But PPI inflation could still stay negative throughout the entire year, partly because of the overcapacity issue.